Guys, Bitcoin is breaking to the downside right now, reaching $62,000 almost on the downside. I'm going to discuss the liquidations, everything, all the news, and for the first time, discuss the aggregated open interest. I did a lot of research here, and I'm going to do a lot more research and incorporate this into my analysis going forward. So let's first of all talk about Bitcoin. Right, we know that we went down here massively and hit the $60,000 support region, and this is a key region which is gonna become very important also here going forward. This is a level where spot buyers are really supporting the current level. If we zoom out a bit, we can see this as well. Not only were we supported right here in early February, we were supported right here early June as well. And also zooming back out a bit, this is a key level which has acted as key support all the way here in 2024. You can see support right here, support. So this is a level where spot buyers are really keeping the price above that $60,000 level. And I think it can act as a strong level of support here going into the next couple of days. Let's zoom in a bit on Bitcoin. After we found support, we broke to the upside. We created this higher low structure, which yes, we have broken now, and I can remove this finally. We have started a small downtrend. You can also draw this in a different way, whereby we have basically had a small bear flag pattern. A bear flag pattern, of course, meaning that we trade in this way, whereby we have like a flag and then we break to the downside. We can say we have broken this now to the downside. This is more clear if I draw it on the daily. We can see a mini bear flag pattern. Before that, of course, we had two big bear flag patterns. Look at these, two big bear flag patterns broke to the downside, and now a mini bear flag pattern here before another big move that will come. Let me remove these lines again and see what happened. We predicted that we're gonna move up. So we had this symmetrical triangle here previously, which basically we can draw in this way, like a symmetrical triangle. We broke that to the upside, and then we reached our target, which is right here at this previous level support and resistance, all the way at up to like $67.7 thousand. We actually reached this previous top. So if I draw this here, you see this previous top, we actually hit that perfectly right here where the candle ends. And unfortunately, I did not get entered into my short position yet. I actually entered it a bit higher, like $200 above this level. I'm happy we predicted it, corrected it. We're gonna get rejected from this level, yes. But nonetheless, I still think we're gonna go up eventually to grab this liquidity, which is still remaining up here. But that's gonna be in the next couple of days. For now, I think we're gonna go a bit further down. And in yesterday's video, I said that this level here, the previous high right here, which we had on the 8th of June, has acted as support. And I was saying, okay, it can act as support again and bring us back up. But no, we had the FOMC meeting. It came out not as good as expected. I mean, the interest rates are the same, but going forward, we're not gonna see as much information from the Fed meetings going forward. For example, they're not going to be making predictions about the future as much anymore. And based on that, there's more uncertainty in the market, and uncertainty, as we know, is not good for the markets, right? We see this crash down here to the downside. SpaceX, for example, also had a correction. Many companies in the S&P 500 had a correction, and we had a nice big push to the downside on the 4-hourly here, broke through this level cleanly, and now the support lies right here. We can see that this support is somewhat correlates with this level right here, or somewhat correlates with this level right here. And let's see what will happen, but I think we'll go a bit further to the downside. So let me talk about the liquidation heat map here. If I go onto let's start with the 48 hourly. So we're gonna go through them. On the 48 hourly, we can see that we have grabbed all of this liquidity, which was building up to the downside, and we are building up some more liquidity now on the upside, of course, from people who are shorting the market, right? We are seeing people shorting the market, of course, and the liquidation price is always the other direction. So if people are shorting the market, the liquidation price will be above them. Let me go out here to the 1 weekly and see what's happening on this chart. The 1 weekly I like very much, and we can see that we have grabbed all of this liquidity to the downside, and of course, Bitcoin always follows that liquidity. If I go now to the 2 weekly, let's see what's happening right here. We can see that actually and this is where the important factor comes in. We have a lot of liquidity here around the $60,000 region. And this is, of course, the level which has been acting as strong support by spot buying. And of course, psychologically, $60,000 is a level which people do not want to be breaking below of, and is also, in my opinion, the next target here for the interim short term. before I expect us to go further to the upside. Now let's talk about this chart, which I have the funding rates here. Okay, and the funding rates are just telling us if most traders are longing or shorting the markets. If they're positive, most traders are longing. If they're negative, most traders are shorting the markets. And here, just alone here, we can, for example, see that when we went up, a lot of people were betting on falling prices. They were shorting the markets, but of course that was building up liquidity on the upside. As people are shorting, liquidity is being built on the upside, and as price moves against these short traders, they are being liquidated. We grab that liquidity. As soon as we moved down, people started longing the markets. Liquidity was grabbed on the bottom side right here, and now we can see that funding rates have reduced a bit here right now, as people of course have been shorting, have been longing, and now they're starting to potentially short as we reach somewhat of a bottom here. Eventually I think we're going to go back to these levels, but we have the aggregated open interest chart. And now let me do a quick deep dive into what I found in the last 2 hours of research. I'm gonna discuss this quickly. So first of all, we can look at here. So what is the open interest? The open interest actually measures the total number of open contracts in the market. So this is just based on futures contracts. And if open interest increases, it does not necessarily mean that we have more longs or more shorts. It is just unbiased. It just means that there is more contracts being opened on the market. So right now here we can see open interest increasing. More people are either longing or shorting the market. It does not mean they're longing, but there's more contracts in the market. And usually if open interest reverses, it suggests that the pressure in one direction is losing momentum and that we might see a change in price. Now, there's a few different things we can see about open interest. So there's 4 scenarios here. If open interest is going up, it is a strong momentum, right? Either in the upside or the downside, it doesn't matter. So like I said, if open interest increases, even if price falls, it does not mean that we're gonna go in the other direction. It just means that there's a lot of shorts being opened, for example, or a lot of the price has good momentum, and usually the trend continues. Same thing here, for example, so price goes up and open interest is high. That means we have a strong bullish trend. If price goes down and open interest is high, we have a strong bearish trend. What is important to look at is if we have divergences here. So if open interest is flat or it's going down, then momentum is falling. For example, if price is going up but open interest is not really going up, then this rally is not being sustained, and we can expect potentially that we have a top and we might reverse. Same thing if price is going down but open interest is not really going down, this downward move is not being sustained and we might see a local bottom. Now, for example, right here we saw, of course, Bitcoin's price went down from these levels here, which were, I believe, around $72,000, and we had a big move down. This was, of course, early June. And at the same time, open interest went up a lot. So this elastic band, you can say, has really been stretched. And usually when open interest goes to these really high levels, we see some form of reversal. And because open interest went up very strongly while price went down very strongly, this is a sustained good trend, right? So we can expect the trend to continue to go down. And at the same time, the moment we went too far below, people who were longing the markets were hitting their liquidation prices and they were forced to liquidate the positions. And this suggests, of course, their contracts are being closed. So the positions are being closed that they have. And this is being seen here very clearly by the open interest. The open interest starts falling here and goes negative as all of these contracts are being closed, and people's long positions, people who've been longing here falsely, have been closed down on their positions. And now let's look at the most recent up move. So let's look at what here Gemini says. And I really recommend you guys to also do some research on your own, not just watch my videos, but do the research on your own. Just ask these AI tools, they're amazing. So what we can see here, price went up, okay? But the open interest did not really go up. It kind of went sideways, it slowly creeped upwards. And it tells you that, look at this, what Grok says, no fresh organic institution capital is entering the markets to support these price levels. So what has happened here is that people who were shorting the market before successfully from like $82,000, from $72,000, they are now cashing out and closing their positions. And as of course positions are being closed, so there's less contracts in the market, and a contract is just like a derivative contract. If I have a long position, short position, that's a contract, right? And as people are closing down their positions, open interest is of course falling. And look at this, because closing a short position requires a mechanical buy order, this naturally drives the price upwards. And we can see this right here, and we don't see really an increase in open interest as much as we had right here, where the trend was very clear and the trend was continued because the contracts kept being opened. But right here we saw that actually open interest remained somewhat flat, and the trend did not really get sustained and continue as much. And what can we see right now? Well, we can see price is going of course to the downside while funding rates are reducing, so people are starting to short the markets, and open interest is going upwards. So this short pressure is not really stopping. People are still shorting the markets, as of course short sellers are trying to push the price back down towards these lows at $60,000. Of course, these are the lows right here at the liquidation prices. $60,000 is the price that we are targeting to liquidate most people. And going back on the chart, this is also what Grog is predicting to be happening next. And I think that makes sense for us to be grabbing that liquidity at around $60,000 here to the downside. And once we hit that $60,000 level here, which is a key support level and a level from which we most likely will bounce to the upside, open interest is most likely going to see a big red candle, as people who are shorting the markets very late, so people who are entering short positions right now, which is of course not the right time to enter short positions. You want to be entering at resistance. If you're entering this late and the price goes against you, then it moves up now on the bounce, you're gonna most likely get liquidated. This will mean that open interest does reduce as positions are being closed, and that is it essentially. And I expect us to go back, rally up back towards these levels here, this level right here, which was the previous peak of course. And if we break up from there, then I think we could potentially go also to the $70,000 level up here. And once we grab that liquidity here at $60,000 and move to the upside, let me go back here on this chart, we can see that I believe we are gonna hit that, grab the liquidity that has been building up on the upside. Now that is it. I'm gonna do a lot more research on the open interest and try and incorporate into my charts. If you like that, smash the like button. And now let's talk about STRC and MicroStrategy. Their preferred stock, STRC, usually trades at $100. It has gone down tremendously. It has gone down by over 12% from the $100 mark. And at $100, it has been giving 10% or 11% return. Right now, that is 14%. And in order for the price of STRC to remain high, of course, MicroStrategy has to either sell Bitcoin or increase the returns that are being promised to get people back to buy this. And as the price is down, then MicroStrategy might have to sell some more Bitcoin to bring, to fund these high returns that they're promising. And as for SpaceX, it has now gone down over 20% from its peak, and I discussed this yesterday, but I think we are a bit overvalued, and a lot of the FOMO and retail FOMO has been there in the market and pushing the price up, and I expect it to cool down a bit before eventually, of course, long term, I think SpaceX can perform very well. Keep in mind, they don't really have that much earnings yet. Actually, they're not profitable. And looking here at oil, we can also see, because the Iran situation is calming down, we can see that oil, of course, is front running this and is going down as well. Right now approaching these levels which it has been previously trading at, and oil likes to be below $70 per barrel, which is also where it should be. Hopefully then inflation will also calm down. And that is it for today's video. I think yes, we can go to the downside in the short term. We are moving down, we're grabbing that liquidity here at $60,000. The momentum is there, open interest is positive, so there the short move is most likely to continue, and I think we can have a bounce from here and eventually create higher highs before long term, of course, going further to the downside. We know that Bitcoin is not at the bottom of the bear market yet. The bear market usually lasts for 12 months. You can see this happen every single time, which should bring us to October. So of course, it's normal that Bitcoin moves up and down in a bear market. We have these up and down moves. And I think, yes, we can retest at $60,000 level, go back towards close to $70,000, something like that, and then break further to the downside. If you enjoyed the video, smash the like button, let me know. See you tomorrow, and bye.